Deputy VP Research at Sharekhan at BNP Paribas, Kaustubh Pawaskar, with us on the show today. Kaustubh, good having you. Thanks for joining in this early in the morning. Just trying to understand, Kaustubh, what are you telling your clients when it comes to the FMCG names? Is there rural demand recovery? Is there cost pressure easing? Is there sentiment changing around the staple names?
Certainly. So in Q1, we have seen rural demand outpacing urban demand, and that helped most of the FMCG companies to see a sequential recovery in the volume growth in Q1. I think this trend will continue. We have seen monsoons to be good, well spread out. We should expect agri production to be better, and that further augurs well for the FMCG companies. In fact, even government has also put in a lot of efforts to improve the rural sentiment. So I think overall we should expect this momentum to continue. Rural demand will continue to improve and will be much better in the quarters ahead. We should expect urban demand to be quite stable, and overall the volume growth should improve in the coming quarters. We are expecting H2 to be much better than H1 in terms of the revenue growth. Whatever the pricing deflationary scenario was there, I think it is almost over now, and we should expect revenue growth to be in line with volume growth. So overall, we should expect second half to be much better. In terms of cost pressure, I think we have seen raw material prices seeing some bit of uptick, but they are quite stable. Crude, we have seen falling below $75 per barrel, so it augurs well for the paint companies and other FMCG companies. I think in terms of gross margins, we should expect gross margins to be slightly better or stable on YY basis. Even the EBITDA margin should be, slightly flat or, on a better side on year-on-year basis. We should not expect a significant jump in terms of margins. But in terms of revenue growth, we should expect revenue growth to be much better compared to what it was in H1.
Kaustubh, we get your point. The second half of the year is when you will see this rural recovery, impact earnings as well. How much of this do you think is already in the price? Because for the last 6 to 8 weeks, we've seen a solid run-up across consumption names, right? So some may argue it was on back of earnings. Others believe it's a great defensive play in a market such as this. Do you think valuations are comfortable, and how are these stocks stacking up on the risk-reward basis? And what are your top stocks in the sector to play rural consumption at current valuations?
So we have always remained selective in this space because there are certain stocks which have not done well in past 2 to 3 years. For example, Hindustan Unilever, if you compare its valuation to last 5 years average, it is still at a discount. And we have seen that, and we believe that once rural recovery is there, HUL will be one of the key beneficiary in terms of, recovery in the volume growth. We have seen its market share gain, product portfolio has remained high, and that will continue. But if rural recovery is on track, I think that should benefit HUL, and we should expect, a company to post good performance. The important factor for Unilever is now, HUL is that it is focusing on its core business of, home care, personal care, and, food and refreshment. And, the innovations and the premiumization is happening around these 3 key, pillars for the company. So I think we should expect HUL near-term and medium-term performance to be much better. And in terms of margins also, we should expect, gradual recovery in the margins in the coming years, with premiumization remaining core of the strategy. So we believe that HUL is one stock in the large cap FMCG space, which will continue to do well. Britannia is the another stock which we believe that there is a fair bit of, space left, because we have seen Britannia's volume growth to be better compared to industry growth. The rural is coming back on track. Britannia is focusing on the Hindi speaking belt, where it is expecting growth to be much faster compared to its other markets. It is also focusing on launching new products in its basket, and overall we believe that Britannia should definitely do well. In the large to mid cap space, we believe that Dabur is one stock which should do well with rural coming back on track. Godrej Consumer Product, we have seen the company is doing exceptionally well for its India business. We have seen some of its strategies playing well, and that should continue to happen. Imami is the another stock which we believe that valuations are still looks conducive for the investment, and I think again the rural play will definitely well for Imami. In some of these small stocks, we have seen small companies performing much better than large companies for past 4 to 6 quarters, and some of these companies look very good in terms of valuation, such as Jyothy Labs or Varun Beverages, where the earning growth will be better than the large companies, but also in terms of valuation, they looks to be much better if we compare to some of the large peers. So these are some of the stocks which we believe that will do well. ITC is one of the preferred pick, mainly because of its discounted valuation, and also its core cigarette and FMCG business is doing well. So I think that should continue to inch up the valuation for ITC in the coming quarters as well.
Okay. Kaustubh, just a call on the retail side of it and a bit on the discretionary play as well. Trend, Aditya Birla, some of your gold sort of plays. Are you seeing that buzz continue there, or do you think the time for staples has come?
See, in retail, again, I will prefer the value fashion space, because that is something which is seeing a good growth. So trend, we have already seen clocking good numbers. It's especially its Zudio is doing exceptionally well in tier 3 towns. Similarly, there are other companies such as V2 Retail, which is again a value fashion space where we have seen its same store sales growth growing in strong double digits. Is average revenues per square feet is consistently improving for past 6 quarters, and they have certain targets where this revenues will continue to improve along with the profitability. So strong earning growth is expected in B2 retail. Valuations at around 14-15 times FY26 EV by EBITDA is much better compared to its peer. And I think if it continues to post good numbers at operational level, I think B2 retail valuation will continue to further improve.
So much, Kaustubh. We'd love to chat further because this is a space which might see a kind of a rotational play as well. Kaustubh Pawaskar there on his top picks in the FMCG space.